Okay, welcome everybody to the latest edition of the Scholar Gypsies. I'm delighted today to have Bitcoin Dinny with us to talk about Bitcoin and cryptocurrencies. It's topical at the moment. Bitcoin's just hit a new all-time high again. As many of my readers know, I got into Bitcoin maybe in 2020, 2021 with very mixed results. So Dinny's is on here today to uh, tell us a bit about what's going on in the markets today, a little bit about his own business, and why Bitcoin is important, or why we should view it as important in the months and years ahead. So, welcome, Dinny. Thanks a million for doing this. I suppose first of all, maybe tell my viewers a little bit about yourself, your own background, and how you came to, I suppose, find out about Bitcoin.
Jerry, how's it going, man? It's great to be here. Um, okay, do you want the summarized version, I suppose?
Yeah, exactly.
I suppose for myself, I've been entrepreneurial all my life, and I've always had a desire to have success of finance, and that was from seeing my family struggle for money. So it was just sort of something that I used to fantasize about when I was a kid. And I worked hard, and I found the first half of my life, I sort of say I didn't understand money, and it was quite ironic because every decision I made is based around money. Like money dictates so much of our life, and in school we're never taught how money works or really what money is or how to understand it. We just instinctively think we're going to pick it up. Um, as an entrepreneur and a business owner, then I realized the value of investing, and I had been investing for well over a decade. Hugely invested into myself, my education. I think that's the biggest return anyone can ever get on any investment they can make is into themselves, because knowledge compounds forever. As I went down the investing rabbit hole and I owned other investments, I suppose I was a gold investor before I understood Bitcoin. And when you understand gold, you can transition into Bitcoin quite easily. So I was exposed to crypto. We all hear of it because of the cycles. You know, it sort of raises its head for a year or a year and a half, and then disappears again for another 2.5 years. And that seems to be the cycle of it. So I'd heard friends were into it, and they'd made money, and then they'd lost loads of money. And, you know, I'm quite focused. So I'm like, okay, I'm not getting distracted by this thing. I'm building my business. I'm working on my business. That's my biggest return. But inevitably it grabbed my attention, and I started to investigate Bitcoin a little bit. And then I found quite easily I was sucked into the rabbit hole and spent, like anything I do, I go all in and get infatuated with something if it's of interest to me. And as I went deeper and deeper down the Bitcoin rabbit hole, it just really changed my world, and really exposed to me that everything I thought I knew about Bitcoin, or everything I assumed about Bitcoin, was mainly incorrect. And that by studying Bitcoin and using it correctly, there's a hard and fast rule that stood for 4 years, for 15 years now, sorry, for the length of Bitcoin. And it's that anyone who uses Bitcoin for 4 years of more is in a much better financial position. Now, there's no guarantee that that continues, but once you understand that, it's like, okay, well, there's a big difference between Bitcoin and crypto. It's all jumbled up together. But so I sort of specialize in teaching people about Bitcoin because of that rule. I'm like, there's not a human on the planet who's used Bitcoin for 4 years who's in a worse financial position. There are many humans who've used crypto, and that doesn't hold true. So that's why, you know, I based my business, as all my businesses, are on things I'm insanely passionate about, and Bitcoin is one of them. So I have a Bitcoin business now 4 years, and we specialize in Bitcoin education and Bitcoin custody.
Okay. And is how I suppose at the moment we've seen that Bitcoin is just recently, hit an all-time high again, just over $70,000, I think it was, or yeah, in that region. Um, if we go back to 2021, I think it was, when Bitcoin hit an all-time high before, there was a long fallow period of a drop from, we'll say, 67 down to 15, $16,000. How, how do you how do you advise clients as you're going through that, when it's all, at the moment it's all hype, but I suppose for the 20, much of 22 and a lot of 23, I suppose there was a lot of it was tilted to the other side in negativity, and oh, Bitcoin's going to zero and this kind of stuff. How do you negotiate that cycle with people maybe that are getting panicky, or they don't quite get what's going on?
With Bitcoin, it takes education to understand what the asset is. There's wasn't a single Bitcoiner on the planet that thought Bitcoin was going to zero, because we understand that Bitcoin is the most powerful computer network on this planet. It's very difficult for that to go away. So every other institution that we know and trust and think will never go away is much more likely to go away than the Bitcoin network. And that's just the reality of it. There's data centers all over the planet, much bigger than anything that Google may have or Facebook may have. The physical footprint of Bitcoin miners on this planet is enormous. So it's sort of beginner thinking that, oh, because of the price volatility, the asset is going to go away. Now, the price volatility, how I see it is, when you actually understand Bitcoin, that's your huge opportunity. The price corrections are your massive opportunity. And the way I like to explain it to people is, Bitcoin has cycles, just like the property market has cycles. We all went through that in 2008, pre-2000 and early 2000s, we had a property bubble. The prices were going up. Then we had a bust. The prices went down. Well, any savvy investors who understood that a house is a house and people want to live in a house, and in more time, people want to buy a house because more people will be born. And anyone who purchased property through the crash, well, right now they're very wealthy people. They're very wealthy families, because they understood that they were accumulating an asset at a much cheaper price than buying it at a bubble price when it was more expensive. Bitcoin has these cycles, but they're a much shorter cycle. They're based around the 4-year cycle, and that's revolves around something called the Bitcoin halving, which we'll probably go into. But the bear markets, as we call them, or when the price crashes, these are the opportunities. What someone who understands Bitcoin does, or I suppose what we help them to understand, is it's create a plan and a strategy. So you're detached from the price. What generally happens, and it will happen again this year, and that's why I'm passionate about education and we put so much content out there, is people only come to Bitcoin when the price is pumping. And then when the price is dumping, they don't want to buy it. Now, as I said, I've been someone who's studied how to get wealthy my whole life. And instinctively, that's what we do. But wealthy people do the exact opposite. Wealthy people want to buy things when they're cheap, not when everybody's running at them. They run into the burning buildings, so to speak. And that's how I try and communicate to people. It's about having enough education that you're comfortable enough in the asset to understand what it is. And that it takes a lot of hours to understand what Bitcoin is. It takes a lot of work to understand what it is. And then you create your strategy. I call it a pension strategy, a retire early strategy. Okay. And it means you detach yourself from the price. It means you detach yourself from the short-term volatility. And it actually means that when the price corrects or goes down, for you, as someone who understands the asset, these are opportunities. This is when you get excited, as opposed to when you get scared. Most of the regular people who don't understand it get scared, don't buy Bitcoin when it's cheap. When it gets expensive again, they need to buy it all. They need to buy loads.
Mhm. Is it a problem, or do you see a problem with your clients or people that come to you for advice and education, that many people go to Bitcoin, to accumulate, but a lot of them end up as like day traders of the coin because of the price volatility?
Yeah, it's a huge mistake. Like there's so many ways you can go wrong in this, and like trading is one of them. You shouldn't, if when you understand money and you understand investing and you understand wealth creation, you should not trade Bitcoin. It's a bad decision. And I can give numerous examples. In fact, maybe I will. I've got a friend who should be worth multiples of millions today, except he traded. If we just priced the assets that he owned and priced them in today's value, they're worth 7 figures. But this guy still lives at home, can't afford to get on the property ladder, and that's because he traded. Now, the thing about trading is it's like, well, I can get there faster. I can make money tomorrow. Whereas by accumulating Bitcoin, you're an investor. I try and teach people, have a decade plan. Have a generational plan of wealth creation, not this is going to solve my money problems tomorrow. Nothing like that exists. And anytime we go down this is the quick, easy way, this is the new way, like I'm in my 40s now and I've made all these mistakes. I've got all the scars to prove it, that there is no easy way. Bitcoin works on a concept called proof of work, and so does wealth creation. And it means it takes work and it takes time to get there. So my advice to people, and I won't give any financial advice or investment advice or legal advice or tax advice on this podcast, but I'll just say from my experience, I don't know any traders long term who've actually improved their financial situation. I know loads of people who've made money short term and then blown it up and destroyed their wealth. If I could just maybe tell one more story of a professional investor, because that was just a rookie, that was just a retail person. There's a professional investor. His name is Rule Pal. And in 2013, he accumulated Bitcoin. Tiny position in his words. He just accumulated some. It went up 5 times and he sold it, made loads of money, thought he was a genius. Studied a little bit more, started to realize, okay, this is an asset I've got to get back into. repurchased in 2017, traded out of it in 2018, made a little bit more money. By 2019 and 2020, he'd finally learned enough to understand this is digital property. Okay, this is the apex digital property of the 21st century. I need to own a lot of this stuff. So then he went all in. Now, this is a guy who's ex Goldman Sachs, has a hedge fund manager, has a massive mansion out in the Cayman Islands. So him going all in is quite a few quid. Okay, but in his words, today he owns less Bitcoin than in 2013 when he made a small bet on it if he just held the Bitcoin. Okay, and so there's two examples of a retail person who can't trade it and a professional who traded it, thought he was making some money, but now realized I have to go all in. And in Bitcoin denominated terms, like I mentioned earlier, maybe in apartment terms, I own way less apartments than if I just held the apartments I bought back in 2013. So trading Bitcoin is a mistake. It's an exponentially growing asset. I'd encourage any listeners looking at the price volatility. If you go onto Bitcoin, go onto a website maybe called CoinGecko, price Bitcoin in its entirety. Okay, just bring a chart up of Bitcoin since it began, and it'll look like volatility. It'll just look like a mess with people losing their money. But on that chart, you'll be able to change it. Okay, that's a linear chart, but this is an exponentially growing asset. And if you change it to a logarithmic chart, okay, where the chart prices it, okay, from 10 to 100, 100 to 1,000, 1,000 to 10,000, you'll see that all the noise goes away, and this thing just it's just going up and to the right. And that's just a constant bull market of a new asset that's monetizing, and it looks way scarier. And it's the exact same chart. We're just pricing it in exponential growth, and that's how technologies grow. That's how the internet grew. That's how pagers grew. It's how the motor vehicle grew. It's how the internet was adopted. It grows exponentially.
Tell me, Dinny, I'm not sure if you have this answer or not, but what kind of how much room for growth is there in Bitcoin as as an asset that's kind of owned over a percentage of the world's population, in terms of what percentage of the world kind of are invested in Bitcoin, kind of similar to, like, if you go back to the early 90s, there was like maybe 1% internet adoption. What kind of adoption of Bitcoin is there in the world at the moment? Or have you any clues to that?
Yeah, I have a clue. We're somewhere around over 5%.
Okay, so
Okay.
this.
So yeah, you see what we do is as retail investors who are only begin our investing journey is we value Bitcoin on its price. We think the price dictates how far it's gone, and we've missed it because me being a normal person, $70,000 is a lot of money, and this thing used to be $1. So clearly, I've missed most of it. I would assume that's rational thinking. But your question is quite intelligent, because really it matters what percentage of the world is using Bitcoin and how much of the world will use Bitcoin. And I believe Bitcoin to be like the internet. Like Bitcoin is basically money, okay, and it's better money than any other money we have access to. So if you ask the question, what percentage of the world would prefer to use better money? Well, 100 is the correct answer.
Hmm. Yeah, no, fair enough. But just on your own journey, Diddy, roughly what year did you kind of get into Bitcoin, and some of the early kind of mistakes or learnings that you had in it, from just your own personal point of view?
I've been exposed to Bitcoin since 2013. I didn't own Bitcoin in 2013. I was too clever, thinking I need to focus on building businesses. But I heard about it then. I had some friends interested. Then I was exposed to it in 2017. But I never really took Bitcoin seriously until 2020. That was when I really decided to go all in, and this is what I've got to focus on. This is my a huge return on my time is to investigate this thing. It was because I I really manage my risk carefully, in that I've been very poor. I've lived in a caravan. I've got myself out of that situation, but I know what that's like. I know what it's like to see your breath. I know what it's like to fall asleep with a superstar, and I never want to go back there. So when it comes to investing, although I'm into motorbikes, people think, oh, you're crazy. You take loads of risk, you race motorbikes. No, I calculate my risks really carefully, and I really manage my risk. And that's why, I think I was reluctant to be exposed to it until I had a really deep understanding of it. So what I did is, because I've been investing and I understand the return on investment, when I decided, okay, I need to learn about this thing, I spent a lot of money going to industry experts, people who were in the space since 2010, and getting into their courses or booking calls with them, and getting some of their time to go, right, I understand there's something here, but I also understand I've seen loads of people just lose money in it. Like, how do we get this right? So that was my sort of gateway into it, because as I mentioned earlier, like I do believe, and I know because it's it's how my life has developed, that education is my biggest return. So I spent a long time accumulating the information, the knowledge, and then by 2020, the world stopped. We had time. I had businesses. We were online. They were closed down, and and I also understood the Bitcoin halving. So I decided, right, let's get involved in this thing. And then we created the Bitcoin with Dinny channel to pass on all the knowledge that I'd accumulated over the years of doing my work on Bitcoin. But I'd say it was gold first. And I think if you understand gold, you understand all the problems with fiat currency and money that's backed by nothing. Bitcoin is backed by energy the same way as gold is backed by energy. And, once I understood that, I knew there was something to it. And the first thing I learned about Bitcoin, which maybe I'll just pass on to the listeners in case I don't mention it, is that there's only 21 million Bitcoin and there can only ever be 21 million Bitcoin. And that makes it scarce. In fact, it makes it finite. And everything in this world is valued on its scarcity. And that's why our time is the most valuable thing we own.
Hmm. Now, do you look at Bitcoin as a kind of store of value, or do you look at it as the potentiality of it to be a kind of like not trade, everyday usage type of currency, or is it just like a digital gold, really? I suppose.
It's everything. And that's why it's difficult to understand. But I'll make it easy to understand. To me and to all our clients, we use Bitcoin as a store of value. We use it as a pension. We use it as it's investing into a digital property. In the 20th century, people invest into physical properties. Once you're doing well, you've your mortgage under control, you take out a bit of debt and you buy a second house. That's what a lot of people my age and a little bit older than me have done. Okay. That was like the way we all used to go and buy CDs. We don't do that anymore. We have a digital version of it. Well, now we have a digital version of property. Okay. And I'll just address the point because this normally comes up in the comments, but you can't live in a Bitcoin. A property investor doesn't buy a property to live in it. It just so happens some humans live in it, but the only reason a property investor buys a property, a physical property, is because they want capital appreciation, okay, from the asset, and they want cash flow from the asset. Now, Bitcoin provides both of those things, so it doesn't matter that there's not a person living in it, because that's not why a property investor is basically just someone who, whether they understand it or not, they're basically saying money in the bank is the worst place for my money. I have to monetize houses. I have to turn houses into money because that's a better form of money than leaving it in euros. And this is just the digitization of that way of storing value or accumulating wealth. And now we have a digital property, except the digital property has no cost of carry. It doesn't deteriorate over time. It's not concreted into the ground. I can move it anywhere. Okay. And if I have a property in Dublin, it's only really people who are in the Dublin area are interested in that property. So I have a smaller pool of liquidity chasing it. But if I have a Bitcoin, it's of the same utility to anyone on any space of the planet Earth or beyond the Earth. And that's the beauty of this thing. It's like all digital. It's like anything physical that we digitize. It's not just the same. It's not just a little bit better. It's an order of magnitude better. And that's why, Video Vault doesn't exist anymore, because we digitized media. And I believe Bitcoin is the same. The 21st century, we're going to see digital property investors be the wealthy class of individuals. But it also is a currency. And this is where people can get confused, because they're like, oh, but I can't buy a coffee with my Bitcoin. What can I buy with it? But you don't buy an apartment block to buy a coffee with it. You sell the apartment block for euros and then you buy your coffee. We have the euro. The euro is a more stable currency in the short term than Bitcoin. We know over time the euro has just gone down in value. Like, I believe over the last 5 years, the euro has pretty much lost half its value. And that's why I'm passionate about trying to teach people this and go, you think Bitcoin's risky? I think the euro is risky. The euro's lost half its value in 5 years. Bitcoin's increased in value thousands of percent in 5 years. Like, it's pretty obvious where your attention should be. But I don't think we need to consider Bitcoin as a currency. It has the potential to be a currency. It possibly will be a currency. It is a currency in some countries already. Okay, but we use the euro. So if I need to buy anything with Bitcoin, you can sell Bitcoin for euros and buy it with euros. The irony is, in the future, you probably will be able to buy a coffee with your digital property. You can't do it with your physical property. So I try and separate and get people to think of it more as the store of value, as you mentioned, Jerry.
Mhm. I suppose that brings it on to an interesting maybe area is custody of your asset. We talk about it as a digital asset. How do you, how do you store your Bitcoin? Do you leave it on exchanges, or do you have a wallet, digital wallet? Do you have a physical wallet? What would you advise people in that kind of area with digital assets?
When it comes to custody and when it comes to Bitcoin, there's so much to learn. And what I'd encourage people to do is, because this is a new asset and people don't understand it, we think, oh, well, I'll just do this and I'll DIY it and it'll be grand. But it's not grand. Every week in our office, we have people find me because they're looking for someone in Ireland because they've lost a ton of money. And it's too late when they find me. Okay. You, with Bitcoin, let's say you own an apartment block's worth of Bitcoin, you own €1 million worth of Bitcoin. You can go out on a Saturday night, have a few pints with your mates, make one little mistake and lose that. All that money's gone. And that's not the way it should be. Okay. Because you can't go out on a Saturday night and make one mistake and go, oh, damn it, I lost the apartment block. Like, we have protections. But in Bitcoin, because most people don't understand how to create all the protections and they DIY or just assume they can learn as they go, you can make because you can have catastrophe quite easily. So what I'd say to people is, before you go putting a larger proportion of your savings into it, spend a lot of time on custody, understand it. And that might mean you have to invest in education. In fact, I definitely think people should do that. Okay. Because once you lose money in Bitcoin, Bitcoin is basically digital cash. Okay. If you're in a jungle in South America and you hand someone a suitcase full of cash and they disappear into the jungle, there's no way of reversing that transaction. It's done, it's final, and you're never going to see that cash again. And Bitcoin is the very same. That's why it is a freedom technology, because it has all the properties of cash, except it works on the digital world. So while that's a huge advantage to us, there's also, we're not used to that because everything else we use on the digital world isn't the cash, it's just debt. Okay, which means we have protections. If I buy something on eBay and the product doesn't arrive, I go to eBay and I say, he never sent it, and eBay refunded me the money. If I buy something through internet banking and it seems to be a scam, the bank reverses the transaction and I'm protected. So we don't have these protections with Bitcoin. But onto your question, sorry to be roundabout, bringing too much information, but this is Dinny. With custody, there's a couple of places you can custody your Bitcoin. You can custody it, as you mentioned, with an exchange, and that means you've got counterparty risk. Okay. Now, is counterparty risk good or bad? We use counterparty risk all the time. Once you put your money in a bank, you've counterparty risk in that the bank legally owns the money and they've got a debt obligation to you. And many people don't understand that the bank owns the money once you put it in there. And that's why they're surprised when they ask for £5,000 cash and the bank won't give it to them, because the bank owns that money now once you put it in there. So we're used to counterparty risk. However, traditional banks are pretty much socialized now. The government owns them. The government will bail them out. So if anything happens to your traditional bank, you're not going to lose your money. They'll print the money, give you back the money, and the money will be worth less. But you don't have the same risk with crypto companies because they're newer, okay, and they don't have the protections or the regulation. Things go wrong. And in 2022, we've seen that the second biggest crypto exchange on the planet, FTX, went into bankruptcy, and there was hundreds of thousands, maybe even a million people exposed to that. Okay, so then the second option is self-custody, as you mentioned. And with self-custody, your risk doesn't go away. You've just transferred the risk. So rather than having a counterparty means you have to trust someone else, now you have to trust yourself. Okay. And again, in the Bitcoin with Dinny office, every week we see people come and they've made mistakes with self-custody because they didn't trust the exchanges, but they made the error. And in a lot of instances, there's probably more risk for a novice trying to self-custody unless they're prepared to do the work than just leaving it on the likes of a Coinbase. As much as a Bitcoin maximalist will be pulling his hair out now and saying, Danny, not your keys, not your coins. But I'm in the real world of a custody business. I see people lose their money all the time. So I'll give I won't give the advice that's in trend. I'll give actual, what I think is, well, in the real world, I'm seeing people mess up on self-custody because they won't do the work. They don't understand how to back up, how to test wallets, all the do's and don'ts that are a requirement of self-custody. You don't understand that if you're self-custodying a Bitcoin wallet and it's got $5,000 on it, like that's like keeping $5,000 cash in your house. Are you comfortable doing that? What happens if your house gets broken into? So you have to, there's a lot of considerations with self-custody, just as there is with counterparty risk. And now we have a new financial vehicle. We don't have it here in Ireland, but it will come. And it's a Bitcoin ETF. And this only launched in January. I've been speaking about this for 6 months now. Once we knew it was coming, we've been trying to educate people on this and how it will change the dynamic of Bitcoin. And now we've seen that. And basically, an ETF is like a financial vehicle or product, which means it's very easy to get access to Bitcoin. You don't have to trust a crypto company that's a new company, and nor do you have to go and get yourself a digital wallet and try and figure out all the do's and don'ts with one of them. You literally just ring up your broker, okay, where your brokerage account is, and you say, can I put 1% of my portfolio in Bitcoin? Thank you. And you hang up the phone. And if that happens to be $1 million, that's all done for you behind the scenes by a legacy company, okay, with a 50-year-old or an 80-year-old reputation and history. And it just means that onboarding into Bitcoin is a lot easier. Now, again, is there pros and cons to a Bitcoin ETF? Of course there is. You never actually own the Bitcoin. You can't withdraw the Bitcoin. It's not your property. You just have price exposure. But to some people, that's all they want is price exposure. To people who go down the Bitcoin rabbit hole, they realize it's freedom technology, and it is worth actually understanding that this is a money you can own, a money you can spend promiscuously, and a money with a fixed supply. And eventually, I think anyone who goes down that rabbit hole will want to understand how to actually own the asset themselves rather than just have the price exposure. But that's 3 ways we can own Bitcoin, and there's no right answer. It's what's right for the individual.
No, I appreciate that. I suppose, Dinny, you mentioned the phone ringing in the office a few times there. I'd say over the last 2 or 3 months, exposure to Bitcoin in the media is pumping as well in terms of the price. There's been a lot of price appreciation over the last 2 or 3 months. Where do you see us in the current Bitcoin cycle, our bull run, and kind of where do you see, you mentioned earlier about 4-year cycles and stuff like that. Where do you see us in the current cycle, and where would you see the price moving in the short term, we'll say to the end of the year? Are you an optimist about where we go from here, or are you somebody that says, you know what, we might get a pullback, uh, in the next couple of months?
Life's better when you're an optimist. Okay. And life is also better when you're an optimist in Bitcoin. Why? Because if you look at the thing over the last 15 years, with volatility, the price is only going up. So by betting that the price is going down, you're betting against the trend of a technology that's going to steamroll you. So it doesn't make sense. When it comes to people trying to predict short-term prices, and is Bitcoin going to go up or is there going to be a pullback? Again, to become a sophisticated investor and to actually retire yourself early in this, you need to be able to detach yourself from all that. Short term, it's just noise. It really doesn't matter. Okay. Now, to someone who's just coming into Bitcoin, they're like, oh, but I bought Bitcoin at 72 grand and now it's 70. It's almost rite of passage, because if you own Bitcoin, that's nothing. You're going to have to go through 30% drawdowns. Okay. So it doesn't matter when you really understand it. Okay. All I focus on is the fundamentals. And that just means how many people are using it, how many people need to use it, and are we trending towards more people wanting to use it? Okay, these ETFs alone, this is just one new demand that's came into Bitcoin. They're purchasing 5,000 Bitcoins per day, 5,000. Okay, how many Bitcoin are mined per day is your next question. 900. The halving happens, okay, in less than a month. That's when this amount of Bitcoin created per day drops to 450. So we don't need a degree in economics to figure out if the demand is 5,000 per day and we're only creating 450 per day in 30 days time. Well, the only other place Bitcoin can come from is from the hands of people who own it. And the only way to get it out of their hands is for the price to keep bidding up. Okay. But a lot of the Bitcoin supply hasn't moved in a year because people understand what they own. And some Bitcoiners will hold their Bitcoin for 10 years, 20 years, and some will never sell it because they understand it's property. And they understand that rich people don't sell property, they leverage property. If you own Grafton Street, you happen to own, let's say you own a couple of shops on Grafton Street, you own the land and you inherit it from your father, and then you just sell it for euros, your father will kill you. He'd be like, that's prime real estate. That's going up forever. Why did you sell it? Yeah, you got some euros, but you could have passed it on. Why didn't you leverage it? Why didn't you borrow against it? Why didn't you let shops rent off it and put the rent up every 5 years? Okay. So again, the supply of Bitcoin is only going down. The amount of Bitcoin created is only going down, and the demand for Bitcoin is ramping up. Because I've said one entity is buying, 10 times more Bitcoin than is created per day. Now, there is Bitcoin on shelf. So exchanges and miners, they have some on shelves through the bear market where people who hadn't been following us weren't accumulating. Okay, so they have some on shelves. But once those shelves run out, which I believe they will, and they are, and that's why we're seeing the price keep going up. And a little bit later this year after the halving, I believe there's going to be fireworks. And I do believe we're going to six figures. And will there be crashes along the way? Of course there will. It's just a volatility. We've got market makers, we've got big traders. I know some of them, they can move the price of Bitcoin. And again, if you are trying to trade this thing, a day trader or anything like that, you can't trade against market makers. They take the market up to take out the shorts, they take the market down to take out the longs, and then we just truck on. And that's what it is. And when I ask market makers, I say, I remember I met one of them and I said, what do you do for a living? And he says, I take money off retail traders. And I really understand it when I got to know how they trade and how they move the Bitcoin market and all these exchanges. And I could make way more money if I shilled referring links and sold people courses how to trade, because my channel would be 100 times larger, because this is the get rich quick way. So you get much more attention, much more money. All those exchanges would pay me loads for referral links. But I'm fortunate enough that life's been good to me. My business has been good to me, and I sort of always operate super ethically. And this is why I really try and hammer home. You can't trade. I know these trading platforms say zero fees, but the reason they do that is they sell all the positions. The guys like my friend who knows the positions that all these little retail fish sit in, and they just move the market there to take their money. And that's why short term we've got all this chop, but it's just noise. Like if you own 0.1 of a Bitcoin today, you own 0.1 of a Bitcoin. If you're valuing it in euros, it's all over the place, because last year it was worth half as much as it's worth today. And next year, God knows what it's worth. Okay. But how I think of it is I own 0.1 of 21 million of these digital properties for all of time. And it's pretty obvious to me that in the future, these things are going to be valued higher.
You brought up something there, and I just want to ask you about it. Is, we have the Bitcoin halving, and for people that don't know, is that there is a certain amount of Bitcoin created every day, and it's on a mathematical formula how much that is, and it's halved every 4 years. Now, the question I have, Dinny, is what's the incentive to Bitcoin miner? Or is there to Bitcoin miners? Is there a incentive with the halving that the miners mine the Bitcoin? Is that is there a danger of that business going away, like as the returns from it are kind of decreasing?
Yeah, well, the returns are actually increasing because of the monetization of the asset. Should we maybe explain the halving in case some people
Yeah.
are, and then maybe go into that?
Mm.
So the halving is the rate at which Bitcoin is issued. The incentive for someone to be a Bitcoin miner is that you get paid in Bitcoin to do it, and Bitcoin has a monetary value, and you can sell that. And it's like a gold miner. He digs the gold out of the ground. He does work to get the gold, and then he sells it, and he puts a spread, like any business. They put a spread in between it, and that's how the world of capitalism works. So what incentivizes a Bitcoin miner to burn electricity, to purchase the hardware, to hire the people to run the facility, is that they can make money doing it. Now, should normal people do it? No, absolutely not. It's not profitable in Ireland with our electricity costs, unless you have got renewable free electricity or cheap electricity. Because again, Bitcoin mining, it's not like having a barber shop in Dublin where all your customers are just in your locality, and all your competition is there another barbershop going to plant itself near me? This is, if you're a Bitcoin miner, every single person on the planet can compete with you. So it's an insanely competitive business. Mm-hmm. Now, the way Bitcoin is issued is there's 19.5 million Bitcoin of the 21 million in circulation. Okay. And how we got there is when Bitcoin was first created, we were mining 50 Bitcoin every 10 minutes. So that's thousands per day. And every 4 years, this is cut in half. So then we went to 25 Bitcoin per day. Then we went to 12 Bitcoin per day. That's what we were mining when I was getting into Bitcoin. And then Bitcoin cut to go to 6 Bitcoin per day. And that was in 2020. And it caused the price to go from around 6,000 up to 60,000. And the way I try and explain that to people is, and we'll go with the barbershop analogy. Imagine in a town in Ireland, okay, there's 12 barbershops. And they're all busy and life's good and they all have customers, okay? And then one of the barbershops, and this wouldn't work in the real world, but it's just a hypothetical, terrible analogy that I've came up with on the spot. But one of the barbers decides to pull out a shotgun, and he goes around to 6 of the shops. He says, if you cut a single head of hair, you're a goner. So overnight, boom, 50% of the barbershops in that town now don't exist. So the remaining barbershops, the remaining 6 barbershops, are they, if someone was to put a valuation on the business, are they worth more? And it's pretty obvious that they are, because the same customer base now has only the choice of 6 barbershops to go to instead of 12. And if that guy decides again, Jesus, that worked out right well, I got a lot busier, I might do it again. So he went around to 3 more of the barbershops and he got them to shut down. And obviously in the free market, the free world, how that works is, well, other entrepreneurs are going to go, Jesus, loads of money in barbershops, I'm going to open one. But in this analogy, it can't happen. Okay. So now the barber had 12, then he had 6, and there was only 3 barbershops in the town. So again, the business, because it's a scarcer asset, is more valuable. Now that's exactly what's happening with Bitcoin, except this isn't the real world. This is the digital world where it is possible. Nobody can change the fact that there's only going to be 3 Bitcoin created every 10 minutes instead of 6. And then the market has to reprice Bitcoin because it's even scarcer. And that's why in the first 14 years of Bitcoin, we're after getting over 90% of the supply has been created and put out into the world. But because every 4 years it cuts by 50%, we're going to 3 now next month. Then we go to 1.5 4 years later. Then we go to 0.75 of a Bitcoin created every 10 minutes. Remember, these ETFs today are looking to buy 5,000 per day, and we're going to be creating 0.75, then 0.375 in 9 years' time. So the supply of Bitcoin is just going down and down and down, but the demand for Bitcoin is doing the opposite. Because most people, there was always bad propaganda about Bitcoin, and that wasn't by accident, okay? But one by one, people are learning Bitcoin is freedom technology. Everything I thought I knew about it is wrong. And if I actually study it and do the work, I realize I must own this thing. It's the only thing they can't print. They can print more gold by mining it as the price goes up, okay? They can build more houses. They can print more euros. They can issue more stocks. They can issue more bonds, but they can't print Bitcoin. It's the scarcest thing on the planet, and every human who has value, who has exchanged their time for something they call money, and money has a million different forms, they need to store that time somewhere. And Bitcoin, to me, is the best place to store time. So that's how Bitcoin is issued with this halving. Okay. So I suppose sir, is that clear enough on the halving, or is there anything else?
Yeah, no, that's fine. Dinny, it's just kind of point of interest for myself as much as anyone else. I suppose,
Sorry, Jerry, will I answer your question on minor incentive? Just to not
yeah,
leave that, because it's a good question. Because if you're like, well, if the amount of Bitcoin the miners are actually getting as a reward is dropping down, like, our miners all just going to give up and not bother to mine Bitcoin in the future? And again, when you investigate this, it's a valid question, valid concern. But because the price of Bitcoin keeps going up as the adoption, okay, it's more profitable today to be mining Bitcoin than it was years ago, because the value of Bitcoin, even though they're only getting 6 Bitcoins, okay, but 6 Bitcoins at 70K a pop as opposed to 12 Bitcoins at 6 grand a pop, you can see it's more profitable. So although the mining rewards are decreasing, Satoshi, the creator of Bitcoin, who nobody knows who it was, which is by design, and again, really interesting, find me a time where someone creates a technology, okay, that has the ability to enrich themselves, and they keep it a secret who they are. So rather than being paraded around the world as a genius, they hide their identity. And instead of spending any of the Bitcoin that he mined, he spent his computer energy, the same rule, unlike all cryptos where they just do pre-mines and give themselves free coins. Satoshi burned electricity to mine 1 million Bitcoin and never spent a single one. So it's quite a crazy story when you realize how Bitcoin was invented. And it doesn't matter who invented Bitcoin, because it's like, who invented soccer? I don't know. I don't care. Do they have any influence over the game? No, it's just a set of rules now. And that's all Bitcoin is just a set of rules that anyone can follow. But as the miner incentive, we have another way miners make money, and it's from transaction fees. Okay, so not only do they have the block reward for creating the block, but they also have transaction fees. And as Bitcoin is monetizing and more people are using it, well, there's more money made in these transaction fees. And there was a case there a couple of months ago where transaction fees, the network was really busy, and the transaction fees were actually higher than the block reward. So this is how Bitcoin is going to progress, is eventually the transaction fees will outdo the block reward, and that'll be the incentive for people to mine Bitcoin. And it's a free market in that it doesn't matter if miners shut down. And when Bitcoin halves, some miners who aren't efficient, okay, who have old machinery or are paying more for electricity, they'll go out of business. But it won't affect Bitcoin one bit. In 2021, China banned Bitcoin mining. 50% of the network went offline overnight. It didn't affect Bitcoin one bit. It still produced a block every 10 minutes. It caused the price to crash, which was a huge opportunity for people who'd done the work and understood it, but it didn't affect Bitcoin. The difficulty just readjusts, and the software just keeps plugging on, producing a block every 10 minutes.
Yeah, thanks for that, Dinny. I suppose, Dinny, why don't you tell us a little bit about your own business and what type of people come to you, and basically what services you provide in this arena to Irish people?
Deadly. What type of people come to the Bitcoin with Dinny office? Or we have clients all over the world. Everyone and anyone. I've got clients with a net worth of 5 grand, and I've got clients who own business worth 300 million. And so it's everyone and anyone. Bitcoin is for everyone, and this is why it's something I'm insanely passionate about. I mentioned before that I've been at the very bottom of the financial ladder, okay? And I remember sitting in my caravan. I'd read books on investing because I did want to become wealthy, and I rang up a financial advisor, and I says to him, I want to start investing. And he says, how much have you got? And I said, I said 30. And he says, 30 a week. That's nowhere near enough. And I was like, it was a month, I was thinking, and it just felt so small on the phone. And I was just like, nah, I can never get out of this. Okay. With Bitcoin, you can start investing a $5 a week, a $5 a month. There's no barrier to entry. It's not like the property market where you need to have a million or 500 grand at your disposal to get into the market, to just get a leg up. Anybody can start with Bitcoin. And that's why, and people will think, but sure, what's the point in starting with a $5 a month, Dinny? That's nothing. This is an investing. Investing is about deferred gratification, and it's about starting and building this tiny little thing that grows over time. And if you never start, what most people do is they go, I'll get rich, then I'll invest. And that's a terrible way to do it. Okay. The time to invest is when you have no money. You have to try and live below your means, which is really difficult now because the cost of living is so high, and that's not by accident. If you study Bitcoin, you'll understand why that happened. We're using broken money. European Central Bank printed trillions over the last couple of years, and they basically stole everyone's savings because they have so much debt. They had to do that. But live below your means, start investing, and that means that as you're controlling a larger amount of your portfolio bills, you've more experience. Rather than saving all this money, deciding I'm going to be an investor now, you've no experience how to do it, and you come in with what's a decent chunk of cash for you, and then you lose it. So Bitcoin with Dinny, we're sort of like the shortcut. Everything I've done in my life with all my businesses was I've invested into experts, because Tony Robbins taught me there's two ways to learn. You can, become an expert yourself by spending decades making mistakes, wasting your money, wasting your time, and then you'll be an expert, or find an expert, pay them for their time, whether it's a day or a weekend or whatever it is, and then you've decades to actually profit from that knowledge, and that's the better way. So that's basically what we do, is rather than someone having to spend years making all the mistakes and this, missing all the upside, and in 3 years time or 4 years time realizing, okay, now I know how to get it right, in 90 minutes I can build someone a plan how they can retire early, and literally explain everything to them, and give them all the resources for the additional learning that they need to do. So it's just a shortcut. So we do consulting, and then the other part of my business is called the Retire Early Club, and that is like a community. Because together we're stronger. That's how Bitcoin works, through community. That's why it's the largest supercomputer on the planet. It's bigger than that in Google have, because it's a community of computers all networked and working together. And this is how humans have advanced, by forming communities and working together rather than trying to do stuff on our own. So the Retire Early Club is a community of people who are all working towards early retirement. And in that, I have everything people need to know about Bitcoin, need to know about crypto, need to know about themselves, health, and basically all the steps I do to get myself out of that caravan. And understanding Bitcoin is a big part of it. Although for me, I've never sold Bitcoin. I didn't buy it early. To me, it's a pension strategy. It wasn't something I used for wealth creation. But I think had someone have taught me all this stuff, it would have been a hell of a lot easier than the journey I took. So that's sort of what we do in Bitcoin with Dinny.
Yeah, and I'll have links to Dinny's businesses, courses, and stuff like that in the description below this video. Dinny, I understand. One question I want to ask you, because about education, about learning. What channels did you follow in the early days when you were kind of accumulating your own knowledge on this? Because one thing people do is when they go down the rabbit hole, they you come across the good, the bad, and the ugly in terms of people giving we'll say YouTube advice. And there's no point people, as much as we'll advise people, to do it the proper way, or invest time in training themselves, it won't stop people from kind of doing their own research. But I'd be interested to know is what kind of channels you kind of turn to yourself or have done historically in terms of that kind of thing.
Yeah, well, I'm going to plug my own channel because my skill is to make things simple. So Bitcoin with Dinny on YouTube, on Facebook, on Instagram. I go live a couple of times a week, just teaching people concepts about it. One thing to understand about YouTube channels, and just to give the listeners some value, we're going to go into a bull market, I believe. Okay, we're at the early stages of it. Crypto tokens are going to pump. Retail people are going to run into them. They're going to buy them high. They should have been buying them 2 years ago when they were all 10 times, 20 times lower. If they wanted to do that, I don't think they should. Every cycle I've seen new cohorts of people do this. They buy high, they sell low. They watch YouTube channels for free, but they don't understand. Because I'm an insider, I go to all the conferences. I have all the emails. YouTube channels are paid to talk about things and put buzzwords into it. Okay. And they don't disclose that they're large holders of the token. So it's all just a pump and dump scheme, what you're seeing for free. Okay. So you really have to be careful for that. And people think, I've done the due diligence, I've done the work. No, you've watched advertising videos. You just don't know they're advertising videos. Someone who's very genuine and trustworthy in the space will be Simon Dixon. He's been an OG in the space since 2010. He wrote the first book on Bitcoin. Okay, Simon Dixon, really good guy to follow. New listeners probably won't understand everything he says, but that was me back then. Sometimes you have to pause the video and Google what a word means. Another great person to listen to speaking on Bitcoin will be Michael Saylor. Saylor was the first public company to convert his treasury of dollars into Bitcoin, and is now one of the most prominent speakers on Bitcoin and Bitcoin education. And he's an insanely intelligent man, and he really has a way of making really complex things simple to digest. So yeah, I'd suggest Simon Dixon, and I'd also suggest Michael Saylor, and also, if you wouldn't mind me plugging, the Irish Bitcoin Conference, which is on the 25th of May. That's going to be a gang of Irish people, and we're going to have other speakers coming in from all around the globe. And the best way to learn about Bitcoin is to try and meet people in the real world, okay? Or get into virtual communities. But the Irish Bitcoin Conference will be a fantastic way for people to learn about Bitcoin, understand about Bitcoin, and see the people that are there. Like, because people think this is some fringe thing with nutters, but then you go there and you realize you're sitting beside a judge, or you're sitting beside some fella who runs a household name company, and you're like, okay, maybe everything I thought I knew about Bitcoin is not true, because these are fairly sophisticated people that are here, as well as some nutters. Like, I'm self-professed nutter. But you can get tickets for that on Eventbrite, just from searching for it. And thanks for letting me mention that, Jerry.
No problem. I've actually myself and another. Well, there's some a very good friend of mine has booked 2 tickets to go to it, and I'm going with her to it. So, it was actually through that person that I heard about you. So that's the Irish Bitcoin conference,
Correct.
and details are on Eventbrite. Okay. Um, Dinny, I suppose I'll just wrap it up there. We're going about the 50 minutes, but I think we covered all the bases I wanted to cover on Bitcoin. So just final words to say thank you, and anything you'd like to say yourself in summation.
Yeah, thanks for the opportunity to come on and speak to your listeners. And like, my tagline is study Bitcoin for your wealth and study fasting for your health. And I, I do believe that Bitcoin is a positive force. It's going to have a positive impact on the world. And that's why I've self-incentivized myself by building a Bitcoin business, but I'm also building the world that I want to see. Bitcoin is sound money. It's going to fix most of the problems of the world, which is that since the 70s, we've been running on a money that's backed by nothing. And that's why the world is trending the way it is. And it can seem very hopeless, but when you start to study Bitcoin, so I've seen this in our Thoroughly Club, once you start to study Bitcoin and you realize that once you allocate to it your time, and I don't even mean your money, but your attention, your time, you realize that the Bitcoin world is a beautiful world. It's a more hopeful world. It's going to fix all our problems, and therefore it fixes your life. Then you don't have to be rich, but it's all about, and it's again, a lot of the youth today, they realize their situation's hopeless. They can never get on the property ladder. They have to leave the country. They have to leave their family, or else they just be a menace to society. And like, if you put yourself in their shoes, well, if life's hopeless, what else are you going to do? Bitcoin changes all that, and it makes you realize, wow, there's hope for this thing. Most of the world don't understand it. And if I'm younger, I have a more flexible mind, I'm more comfortable online, I'm going to understand Bitcoin much quicker than people older than me. And they're the ones who have all the money. Okay, and they have all that from what we done in 2008 and 2020 when we printed money and we passed all the wealth to them. This is the chance for the youth of today to basically steal your money back. Okay,
Mhm.
by investigating Bitcoin and studying it. It's not a get rich quick. It takes work. It's called proof of work, the same way as you're fit and healthy. It's proof of work. Okay, but to me, understanding, spending time on the Bitcoin rabbit hole was one of the best things I've ever done in my life, and I encourage everyone to go down that rabbit hole.
Okay, that's thanks a million for joining me here today, Dinny, and thanks for your time and knowledge. So we'll leave it at that. Uh, there we
Thanks, Jerry.
go.